Okay. So the name of the company is Yuga Insurance Limited. Yuga Insurance Limited. Uh, Balance sheet as on 31st March 2018. So we'll come back to this a little later once we finish the schedules. So our first schedule is share capital. Schedule 1, share capital. So the first thing that we show, even though we don't have it, we just mention the authorized capital. We just write it. I'll put it as a blank because we don't know the authorized capital. And then we have the issued, subscribed, called up, and paid up. Now, what have they told us in the problem with regard to the issued, subscribed, called up, and paid up capital is they've given some information where we know the number of shares. They've said equity share capital rupees 10, and outside they've got given it to us as 15 lakhs. Okay, they've given it to us as 15 lakhs. So basically, it will be equity shares, equity shares of rupees 10 each. Okay, and how many equity shares? It will be since the total is 50 lakhs, it will be 1,50,000 equity shares of rupees 10 each. How did I get 1,50,000? Total is 15 lakhs. So the total amount is 15 lakhs. That means 15 lakhs is what they have given to us. 15 lakhs is what they have given to us. So if 15 lakhs is the total amount, divide by 10, you get 1,50,000 shares. Okay. Next one, we move to schedule 2. Now, if you see, there is nothing that comes in schedule 2 in this problem. Okay, there is nothing that is reserves and surplus. If you can recollect, we have not put any item under reserves and surplus. So basically, if there is no item, we don't need to prepare the schedule. Okay, but you have to mention it in the balance sheet. If there is no item, no need to prepare the schedule. There's not a single item here. Okay, even the profit and loss account is a loss, the debit balance. So that also won't come here. Next, we have schedule 3. Again, borrowings. There's nothing that we have discussed under borrowings. There's nothing that we have discussed under borrowings. So that also won't come. Sorry. Thank you, Manali. It's on schedule 1. It is schedule 5. Sorry. Okay. So borrowings also we don't have anything. Now the next item in the balance sheet is, though it's not a schedule, it's a fair value change account. I forgot to discuss this. Will we have this fair value change account in this problem? Will we have a fair value change account in this problem? Like the last problem, how we had a working note for the fair value change account, will we have it in this problem? Will we have fair value change account in this problem? Can we have that calculation? We have investments, but can we have that calculation of fair value change? Yes or no? Can we have it? Can we have the calculation of fair value change in this problem? When does fair value change come into picture? I told you fair value change basically takes into consideration the fluctuations in the prices of the shares or prices of the investments that the value of the investments hold. Where there is a difference between the book value and the market value. Now in this problem, they've just given us the book value of the investments. We don't know what is the market value because nothing has been told to us. Okay, so basically in this problem there is no fair value change account. There is no calculation for fair value change account because to have fair value change account we need to know the both the values, book value as well as market value. Here we only know the book value. Okay, so we are not going to have anything there as well. We are not going to have anything under fair value change. So directly we move on to the next. So borrowings also we didn't have schedule 7. Fair value change there is nothing. So we now directly move on to schedule 8. which is Schedule 8, which is investments. Schedule 8, which is investments. Okay, so I think we have around 4 items here. Government, Government of India securities, Government of India securities, which is 9,20,000. Then we have shares in limited, sorry, debentures of public bodies, which is 1,80,000. Then there is shares in limited companies, which is 3,60,000. And the last one is state government securities, which is 8,80,000. So the total of this comes to 23,40,000. This is the total of our investments. Okay. Next one is Schedule 9. The Schedule 9 is basically loans. Okay. Now again, we don't have anything under loans, so we don't need to prepare the schedule. There's nothing that came under loans. Where the insurance company has advanced any kind of loans, there's nothing that has come there. So we don't need to prepare the schedule. So we directly move to Schedule 10, which is fixed assets. Okay. So we have furniture here. We have furniture and the opening balance of furniture. The opening balance of furniture is given to us as 8,400. It's furniture and fixtures. 8,400. And they've also given us depreciation less depreciation on furniture, which is given to us as 2,100. 2,100. So this total comes to 6,300. These here. This total comes to 6,300. Next we have Schedule 10. Schedule 10 is done. Schedule 11, which is cash and bank balances. Schedule 11, cash and bank balances. Now we just have one item here. That's cash and bank balances only, which is called cash and bank balances. The total of this one item is 94,400. 94,400. Then we have Schedule 12, which is advances and other assets. Now we have identified some items here under this schedule. So we first have we have here agents balances, which is 146,400. Then there is interest accrued but not due. Interest accrued but not due, which is 8,200. We also have outstanding premium. We also have outstanding premium, which is 21,200. Then we have advanced tax payments, sundry debtors. Advance payment of tax or advanced tax payments, which is 62,000. And we also have sundry debtors, which is 9,200. I think that's it. We also, oh, sorry, I missed another one. Stock of stationery, some stock of stationery. Stock of stationery is 2,500. The total of this comes to 2,49,500. 2,49,500. Total of this comes to 2,49,500. Next we have, so we are done with schedule 12. Next is schedule 13. Schedule 13 is current liabilities. Schedule 13 is current liabilities. Now here we have sundry unclaimed dividends first. We have unclaimed dividends which are 2,400. Then we also have sundry creditors. Sundry creditors which is 12,600. And any other thing? Yeah, due to reinsurance. Due to reinsurance, which is 60,000. Then we have we have the outstanding claims. Outstanding claims. The outstanding claims come to 1,40,000. So the total of this is 2,15,000. 2,15,000. Schedule 14, which is provisions. We just have one item here, that is provision for unexpired risk. Provision for unexpired risk. That comes to 12,40,000. 12,40,000. That's it. So now we go and transfer these items to the balance sheet. Any questions with regard to this? This is a very simple problem as compared to the first. It's quite a simple problem. Any questions, students? Okay. So let's start with this. So the first thing that we have is sources of funds, and under that there is share capital. Now, even though I don't have these items, reserves and surplus, I still need to write it and I need to put it as nil. Okay, so even if they are not there, borrowings, because it's part of the format. Fair value change account. Fair value change account. So here, this is schedule number 5, 6, 7. There is no schedule here. Share capital, that is we've calculated, is 15 lakhs. 15 lakhs. This is nil. This is nil. And this is also nil. Okay. So that gives us a total here. Next, coming to application of funds. So the first thing that we have here is investments, loans, and fixed assets. So this is schedule number 8, 9, and 10. So total of 8 is 23 lakhs 40,000. 23 lakhs 40,000. We don't have anything in loan, so it's going to be nil. And this is 6,300. Right? Yes, that is 6,300. Okay. Next, we have our current assets. Next, we come to current assets. Now, under current assets, we have two items. Just give me 1 minute. Under current assets, we have two items. The first is cash and bank balances. Cash and bank balances. And we also have advances and other assets. Advances and other assets. Okay, both these come under current assets. One is schedule 11 and the other is schedule 12. So schedule 11 here is 94,400 and schedule 12 is 2 lakhs 49,500. 94,400 and schedule 12 is 2 lakhs 49,500. This gives us a sub total A. This gives us a subtotal A. Now, how do I get subtotal A? Basically, 11 plus 12, which comes to 3,43,900. This comes to 343,900. Now, be careful when this 343,900 does not include 8, 9, 10. It's only 11 plus 12. Okay, this is only 11 plus 12. Please remember that. Then we move on to current liabilities. We move on to current liabilities, which is schedule 13, and we also have provisions. We also have provisions, which is schedule 14. Now, putting these two items together, current liabilities are 2,15,000, provisions are 12 lakhs 40,000. 2,15,000, 2,15,000, and current provisions are 12 lakhs 40,000. 12 lakhs 40,000. This gives us a subtotal B. This was a subtotal A. Now we'll calculate a subtotal B. Which is 13 plus 14. That 13 plus 14 are these two items. That comes to a total of 14 lakhs 55,000. 14 lakhs 55,000. Okay. Then we calculate net current assets. Net current assets, which is A minus B. Now we need to be a little careful here. Okay. So basically A is 3,43,900. Again, this is a debit balance. Okay, and 14,55,000, since it's current liabilities and provisions, these are basically credit balances. So basically here again in this case, like the last problem, the credit balance is more than the debit balance. In the next problem that I'm going to do, the debit will be more than the credit, just to see the other way around. But here again the credit balance is more than the debit balance. So when I'm getting the difference, that's 14,55,000 minus 3,43,900, the amount that I get is 11 lakhs 11,100. 11 lakhs 11,000, just put the commas to make it more readable. 11 lakhs 11,100, and what I'm going to do is I'm going to put this in brackets. Why am I putting this in brackets? Because this is a credit balance. We have minus, we have adjusted these two figures, debit and credit, but the credit has been heavier. The credit has been higher. Therefore, the balance that you end up here with is a credit balance. So your net current assets is basically your current liabilities are more than the current assets. And why I'm putting it in a bracket? Because all these others, 8, 9, 10, and the remaining, whatever is going to be there, are all debit balances. So I can't add this to those debit balances. I need to minus, because basically this is a credit balance. Okay, the same thing that I explained in the last problem. The next item we have is miscellaneous expenditure, which is schedule 15. We don't have anything here in this problem. Then we also have the debit balance in profit and loss account. If you see, that's a debit balance. Okay, so that's what I was saying. These are all debits. Application of funds are primarily debits. So if there's a credit, you need to minus that credit from the remaining debits. And this is 2,64,800. 264,800. Okay, so if we try to get a total here, if we try to get a total here, it will basically be 8 plus 9, 8 plus 9 plus 10 plus net current assets plus 15 and plus the debit of P and L account. Okay, this is how I get this. So how am I going to get this final figure here? 23 lakhs 40,000 plus 6,300 plus 6,300. I don't add 11 and 12 back here. Plus 6,300 minus 11 lakhs 11,100. If this was higher than this, it would have been plus. Okay, so now minusing because the credit is higher than the debit, and plus 2,64,800. If we check, we are going to get 15 lakhs. And this also, again, the total, just one item here is there here. This is going to be 15 lakhs. Okay, so how I'm going to do this is, please, if you want, I can write it down here. It's basically going to be 23 lakhs 40,000 plus 6,300 minus 11 lakhs 11,100 and plus 2 lakhs 64,800. Why have I minus this? Only because, though I'm saying net plus net current assets here, but plus net current assets is showing a negative figure because current liabilities are more than the current assets. So that's why I'm minusing this figure here. Okay, and this is what we get. Any questions? Any questions, students? Any questions? The next problem is going to be a kind of a more elaborate problem as compared to this on balance sheet. Okay, and the last problem that I'm going to do is a combined problem with balance sheet and profit and loss account. But if you have any questions with regard to this and also with regard to problem 7, please clarify them in the lecture.